Hey folks, welcome to today's Steady Trader YouTube Live. We're finally doing one of these live again. And what I wanted to go through today real quick, didn't want to make a big thing. We have a big national holiday, of course, tomorrow, July 4th. I wanted to go through and show you what I call the morning cash flow trade, something I've talked about here, dull market. So let me just show you a couple of trades that I did yesterday, very simply. And what happens is we use a simple 5-minute chart for these trades. And it's a trade that you can do every single morning, where in this case yesterday, for example, you can see the NASDAQ 100, the QQQs actually gapped lower. And as they started to give us a bullish reversal around here, we found a beautiful entry point to go back to close the gap or get the stock, or in this case the index, back up to the previous day's close. So that looks something like this, right? Back to this point. I actually yesterday also did it in the IWM ETF, and like I think in MU was another one we did yesterday as well. But here too, you can see we had a nice down gap, and as we then started to have a nice bullish reversal, there was a great opportunity. I don't know why I just drew a circle, but there's a great opportunity to get in and play for the close of the gap. And this is, again, it's a beautiful cash flow trade. We did it yesterday in MU as well. I think this one was a bit quicker, but I believe we did it in MU. Yeah, we did it in MU yesterday as well. You see gap down and a very nice reversal. And so what I actually did over time, is I found that there's a lot of these gaps happening everywhere. And instead of just randomly looking around the market, I actually built a bit of a scanner. So what I have the scanner. It hasn't populated yet because the market hasn't yet opened, but I'll quickly share it with you guys if I could find the, how do you flip the camera here? It looks something like this, and there's basically 4 different scans. 2 scans to, let me make this like this, 2 scans of either an up gap that's likely to close or a down gap that's likely to close. Up gap likely to close, down gap likely to close. And then the same thing for an up gap likely not to close and a down gap likely not to close. So those are the 4 different scenarios that we can have. And so I have this program for every single morning. All I have to do is come in here, look for these trades. And yesterday, again, like I said, I had a couple of these things show up here, especially QQQ. And so it's a trade that usually doesn't take longer. The trade usually doesn't take longer than, I don't think on average it takes longer than an hour and a half on the long end. On the short end, it can take 10 minutes. But I don't like to trade those kind of. But the reason we do this trade is, yes, of course, it's to generate some cash flow, right? But it's also really nice to give you perspective. Like, for example, yesterday, as this gap started to fill, as we started to get this signal by our indicator here telling us the gap was going to close, and we bought it for the gap to close in the NASDAQ 100 yesterday, it also told us something about the broader market we needed to know. So there's opportunities that it gave us about other opportunities in the market, both intraday and a bit longer. And by the way, and I'm not a day trader, right? I'm really not, but this is a trade that we do, and we do it several times a week, not every single day, but although there's opportunities every single day, and the scanner gives us opportunities every single day, I don't necessarily feel like there's like 90% chance opportunities every single day, maybe about 3 to 4 times a week. So anyway, so we'll do a special webinar on this in about 2 weeks time or so. So stay tuned for that. But for right now, just know that this is the kind of trade that works in any market environment, also when things are kind of slow or a bit choppy like they are right now. Have a wonderful day, and I'll see you guys in probably the day after tomorrow. Take care.